What does a Tesla tax-free investment look like? Now, this is high risk and not for the faint-hearted, okay? It would, first of all, involve you being in a jurisdiction where you could use spread bets, leveraged, not recommended. Spread bet gains are tax-free. It's leveraged, so it's highly risky. I'm going to go through the numbers in a second, okay? The way it would work is this. Let's say it was at 342.58, 342.58, all right? Well, in this case, buying at 342.64, right? £1 a point. Now, there's leverage implied in that, which people don't realize, okay? The margin you would have to pay, the deposit you would pay is 1,540. However, you could lose a lot more than that, right? Now, let's say you structure this in a way where if it drops 50%, you would therefore lose, let's call it roughly 34,250 over 2, that's 17,000 points, which is 17,000 pounds plus interest costs because you're borrowing money because it's leveraged. If it moves to 50,000 or $500, you make 16,000 pounds because it's £1 a point. That's your margin. People confuse margin with their risk. They confuse it with how much they could lose. All of that's wrong. The big risk is it drops or it goes sideways and you keep paying interest charges, or you get greedy and hold too long when it goes up, or you even add more capital as it goes up and you're over leveraged. That's how hedge funds blow up. Okay, or you decide, hey, I can do it with this. Why don't I just do it with other companies as well? Now, the fact that £1, or let's say if it were me, let's say I did £10 and I say to myself, well, okay, that's not too bad. I'll make 160 grand if it goes up to that. And I can take 170,000 drop and I won't even exit if it drops down to there. If it drops 50%, hey, it's okay. I've got the cash for the margin. I'll hold on. Let's say you were an ultra high net worth, you might even do £100 a point and say to yourself, well, that's fine. I make 1.7 million if it goes up, but I need to have margin of 1.6 million. And some ultra high net worths do that. That's tax free. That's what the gain would be. You can see what the risk is. You can see why leverage spread bets, well, 70% of people lose money, depending which broker they use. Why? Well, what are the common mistakes they make? First of all, they add, as it goes up, they add more money to the position. Guess what happens? It moves down a little bit then, and the position is so big, they lose a lot. They can't meet the margin. They get a margin call. It drops and they realize margin call. They don't even wait for it to drop. They suddenly panic and say, what the hell am I doing? They look down. Margin call is not even needed or instigated. Panic gets them out. So you can see why most people lose money. And that psychology is what the brokers rely on. They know that's what's going to happen. Anyway, that's what it is. Not recommended unless you are a very sophisticated trader with a lot of experience. Thank you very much.